every drug, you know on the first day itself what day it will go off patent. And it is fully allowed that you pick up that drug and you reverse engineer to figure out how it has been made.
So pharma was the only sector which went up during COVID.
People have started highlighting the risk of something bad going on between Taiwan and China. So what happened was that the raw material input prices for a lot of pharma drugs also went up suddenly.
Why would I invest in an Indian company if I can be closer to the innovator, as you said, and invest in MNC which is listed here?
The US is the leader as far as the generation and innovation of drugs is concerned.
Apex is the least relevant, I would say, for a pharma company.
A lot of paranoid buyers started stocking up on drugs.
Which meant that the bargaining power moved completely to distributors and there was a sharp price erosion for the manufacturers and sellers.
Indian engineers, there are three sectors where they have an edge, which is auto ancillary, IT and pharma.
In case of Sun Pharma, why last 3-4 years has been so good has been because...
Hi, my name is Shashank Udupa and welcome to HDFC SKY presents Make Money Matter. Now our podcast has got financial experts who will talk about insightful information about different industries in the stock market, and after listening to this podcast, you will be the smartest guy in any room. Now you won't find any podcast like this which has so much depth of information, and this podcast will actually make you one of the most informed investors. So, Varun and Unmesh, so this is a question that I want to ask you guys about the pharma sector, right? Now, pharma as a sector is very big, very confusing for average Joe retail investors because there is so many things to look at. So, when we're deep diving in today's session, first thing I want to ask you guys is, when you look at pharma sector as a whole, and we saw something like this happening in the time of COVID, right? When we saw the whole pharma boom happening, it usually works in cycles, but we saw after COVID everything went up, and we saw a lot of plays coming into the picture at that time. We had China plus one, and we became the API hub and all of that. But immediately we saw a fall of pharma at that point. So now the first question I want to ask before we go into current scenario of pharma that everyone's talking about, I want to first understand what happened then. Like during COVID, we saw a boom, and then why did it drop off like that?
So the reason is there was too much excitement at the time of COVID because the demand for certain drugs and all shot up, right? Okay. And we, markets tend to a lot of times extrapolate those things into future.
Okay.
Right. So if today the demand is high and it was expected that probably COVID will continue for long and, so markets started extrapolating that short-term growth rate into medium term, right? But then once the COVID thing came off, right? And if you see, while the number of cases still kept increasing, but the fear factor went down quite sharply after the first or second wave. And then the growth rate started to moderate,
okay,
right? For a lot of those drugs. And then the reality check came in, right?
Yeah.
That this kind of growth may not continue. And with that, the second factor came in that everything else in the market became very cheap after the correction in COVID. So it's always relative valuation, right? So pharma was the only sector which went up during COVID. And most of the rest of the market fell 30, 40, 50%. So there were a lot more opportunities in other sectors which had become dirt cheap. So money, like the rotation of money happened the moment there was this view that, okay, COVID is not a permanent thing and will go away in next 6-9 months and it's already fading. You see that relative valuations are far more attractive in other sectors. That's when the rotation of money happened. Okay. So it's not that pharma suddenly went from being too good to too bad. It was also a case of relative. That pharma was looking very good in a COVID. So it was like buying an insurance. That in bad times, people went and bought pharma because at least short term में तो growth improve हो रही है वहाँ पे, right? But बाकी sectors में खराब हो रही थी. But the moment things started to reverse, the other sectors had a big comeback in terms of growth and demand, whereas pharma actually started to come off.
Okay.
Now, there's also one more fundamental thing also. So this is absolutely accurate, but there is also one more thing. What happened was that so fundamentally the demand for drugs also went up. So there was that. And then what happened was that just like there was a extrapolation in the minds of the investor, there was an extrapolation in the mind of the buyer as well. So a lot of countries, a lot of hospital chains, because there are different, across the world, there are different ways in which you buy drugs. A lot of paranoid buyers started stocking up on drugs.
Interesting.
So what happened was that there was a huge inventory buildup which happened. And at that point in time, because of issues with China, there was this China was plus one playing out. So what started to happen was, one, that there was a demand shift towards India. There was a market share gain, let's call it, towards India. On top of that, there was a huge stockpile of drugs which came about. Now what happened was that, just like with the investors, the worst case did not play out. Things started to slow. Now all that inventory was there in the system. Now what happens is that sales are booked at the time of shipping, right?
Correct.
So that sales has got booked. But now it is sitting in the channel. So when the channel was getting cleaned up, the primary sales from the plant actually went down. So you actually saw a phase in which there was a correction in the sales as well. Now I'm talking at an aggregate level, not at a company level. So the demand for that also came off at that. And then what happened was that the second impact came through with the Ukraine war. Because a lot of input prices globally, and that time, there was also this whole geopolitical mess around. Also, there was a risk of, people had started highlighting the risk of something bad going on between Taiwan and China. So what happened was that the raw material input prices for a lot of pharma drugs also went up suddenly. And then disruption in supply chains. Actually, normalization of from early 2020 when COVID hit, the supply chain actually normalized only in 2023. And that was coinciding with the time when all this was happening as well.
Okay.
So fundamentally, it has stabilized only for the last year.
Okay.
Because post that the Russia-Ukraine war happened, right? Which was again a big event from a supply chain disruptions in multiple things and the input prices movement. So pharma companies, the period of that low growth after COVID coincided with higher input prices. And therefore the margin contraction happened.
So it was a double hit.
It was a double hit. And now that seems to be reversing on both sides. That, the growth is now coming back, which is, it's not that growth is again accelerating a lot, but it's just that the base is now normal.
So we're coming back to the base levels.
It's just like, there was a pent up demand in various other sectors as well, like, appliances and durables during COVID. And then we saw 1 year of almost zero demand or negative demand.
Correct.
Because of the earlier pent up demand which happened. So I think in a lot of sectors, there was this issue of you have not been able to gauge the real underlying trend because of from 2020, there have been continuous disruptions. So once the COVID started to fade, Russia, Ukraine happened. So it's only in this year now that, in most of the sectors, we are seeing that things are stable. Inflation is stable, growth is stable.
Okay.
So now, pharma is also back to both growth and margins improving. And there was another factor in case of pharma, which was the US pricing issue. So sometime in 2018, in US, the distribution system got consolidated. It went from almost 70 odd distributors which used to sell drugs to a 3 to 4 player market, which meant that the bargaining power moved completely to distributors, and there was a sharp price erosion for the manufacturers and sellers into the US market.
Okay.
So all the Indian companies who used to operate in US and sell generics out there saw a massive price erosion.
Okay.
Because the buyers, which was the distribution system, became far more powerful than these companies who were supplying. So they pushed them to lower prices. So Indian companies, if you recall from 2015 to 20, pharma sector had a bad patch. Because at that time, 2-3 things happened. One, the FDA plant issues also spiked up.
Yes.
Post that, Indian companies have gotten better in terms of with compliance. And secondly, that price erosion in US continued from 2018 all the way to 2021. And now that is stable. Now US pricing is not getting eroded. And in the meantime, Indian companies also, you have to give it to them, Indian pharma companies moved up the value chain. So they earlier used to supply only generics. Then they have built their portfolio on the complex generics or specialty products as they are called.
Now this I want to ask you separately, right? If I had to break down pharma, because as you said, pharma is big, how would you break it down? As you spoke about generic, API, can you just break it down in very simple terms? There is generic, APIs, CDMOs, can you just break down what these are in simple terms?
So see, API is basically the basic sort of chemical or ingredient which goes into a drug.
It's active pharmaceutical ingredient.
Yeah, that's the full form. But it's basically the chemical which goes into a drug.
Into formulation of a
You
drug.
call it the raw material.
So, raw material of the drug.
From API, you get to a generic, which is like making a basic medicine, but say it does not have a brand name to it. Right? You made a paracetamol.
Paracetamol versus Crocin, let's say.
Right?
Okay.
Crocin becomes a branded formulation. So API, generic, then there is a branded formulation. That's a branded
Generic.
It's in a way branded generic, you can
Okay.
say. Right?
Okay. Understood.
And CDMO and the whole CRAMS opportunity is slightly different. That is, so Indian companies used to be, certain companies were more into API, which is the
Creating this raw material.
Yeah, which is the most basic sort of in the value chain, most least value added product, like in that sense, right? So companies like Aurobindo, Glorus, and all are the ones which are big in this. So this is more scale game.
Volume business.
Yeah, volume business.
Okay.
Thin margin but high volume. If you have high volume, you can bring down the cost, and you can be one of the big suppliers globally, and therefore so, but size and scale and low cost is the differentiation in this. Then as you keep going to generics, branded formulation is then like your FMCG, that you need to have a distribution system, you need to have MRs, you need to have doctors prescribing your brand.
So these are the guys selling the drugs, like your
So
Crocin,
Cipla in India, or Sun Pharma in India,
and
Alchem, all of them,
Okay.
their Indian business is all branded formulation. Like we
Okay.
go and buy Crocin, or we go and buy some other drug.
Okay.
Then the CDMO or the CRM opportunity which you're talking about.
What is that? Is the contract?
Contract development research. If it is contract research and development, the contract research, development, marketing.
So they will do research for the something that you would
So
have gotten outsourced.
for a global sort of a player, global pharma giant, right, who is doing, say, be it Pfizer or Merck, out there, they would be outsourcing multiple parts of their value chain, right? It could be research, it could be development of the product, it could be manufacturing as well.
Oh wow! Complete
Right?
end-to-end service and give it
complete
to me.
end-to-end, right? So it's a far more value-added sort of a business than just selling generics or API. So in that, companies like Divi's is the one of the main players.
Who does all of this?
Yeah. And in this, obviously, you need to have very deep relationship and engagement with the client.
US clients.
Right? So it's not like you're selling one product, like a generic product you can make and sell to multiple players. But the CDMO opportunity, you would be working very closely with a particular large pharma company and would be outsourcing more and more of their work. So your margins compared to a generic where it is 15%, in this it could be 25%. So it's a high value added sort of a thing. Similarly, the point which I was talking about, complex generics or specialty products, which a lot of Indian companies realized that in US the generic prices was going down, right? The point which I was talking about when the distribution system consolidated. Then they started moving to more specialty and complex generic products in US. So Sun Pharma, Dr. Reddy's and all, even Lupin, they moved their business models more and more towards the complex generics.
And selling it in US.
In US.
Okay, making in India, selling it in US.
So they, in a way, beefed up their international business in terms of quality and, sort of made it more stable in terms of pricing and this thing by moving into these. But this requires time. Like, so Sun Pharma, it took them 6-7 years to kind of build it. But now they are reaping the benefit. So in that whole downturn of 2016 to 20 for Indian pharma companies, a lot of them invested in these things. And therefore now they are able to reap the benefit when the US distribution system has stabilized. The way this generic market works is a particular sort of a product goes off patent, and then the Indian companies step in, and multiple, not just Indian, like global companies will come in and start selling it in generic basis, right? And the price erosion is 90%, right? And therefore, the number of the products going off patent also has a cycle to it. And right now we are in a period when actually the number of products going off patent in US is very strong.
So wait, so when a company in US creates a drug for the first time, they get a patent where nobody can copy this for X amount of years. It's a limited patent.
No, you'll have to take it from the top. If you take it from the top. So
let's explain it in
I actually worked in the US on this sector, okay, by the way.
So how do you break, tell me this breakdown.
Look, the what is the crux of this matter, right? Because you have to get down to what exactly is happening in the sector. The fundamental driver of this sector is the fact that the government in the United States wants innovation to happen on drugs. That's the core of everything that is happening in the pharma sector. And the US is the leader as far as the generation and innovation of drugs is concerned.
Okay.
They are multiple times the size of even the European market. The way it works is that they believe that unless someone is deeply incentivized to do innovation, they will not do it.
Because
so
it's
they leave it to the
expensive.
market. Yeah, they don't do it with the government. So if today there is a disease which affects, let's say, 500,000 people, let's say multiple sclerosis, okay, then someone has to build a drug so that there is relief to these people. Now, why would they do that? The only way you can do that quickly and of very high quality is to have very stringent measures, but at the same point in time, leave it to the market. Now, how do you do that? Because today, if I build a drug which helps 500,000 people, I need to be able to see the returns on the end of that. Now, why do I need to see returns? The first is that a lot of my experiments will fail. Innovation, in its inherent nature, leads to failure. The second is that the top minds of the world will be working on this. So all of them need to be paid. They need to be given facilities where they are able to do this. So what they do is that they actually give you something called exclusivity. Let's keep it simple. Where if you build a drug and you go through rigorous rounds of testing, which the government will test. The government only checks. They do not build. You build, I check as the government, and then you will get exclusivity for a certain number of years. And that testing is done by the FDA.
This is a US FDA approval.
US FDA approval. So here is a US FDA approval for you to. The plant has to be given an approval and the drug has to be given an approval.
Okay.
That can take years and years and multiple failed attempts before they get to something which is meaningful and useful. And and there will be times when there will be phases. So I started my career, I remember there was this entire thing about cholesterol drugs. Lipitor, I remember, was the big one, right? Pfizer's $12 billion drug. So there what happens is because you have exclusivity, you can price it at whatever number you want and there is no questions asked on that. Which means that your margins can be not, it could be like, the API could be not even 1%. They will mark it up to a point where they can recover the capital to invest in the next round of R&D.
Understood.
So that's how the cycle works. Now what happens is that the biggest end of value end, as you were talking about, the value add is actually in the innovation. Everything else is actually a subset of that. So what happens is the more you move closer to the innovator, the more you work closely with the innovator, the more value you can extract out of that process. So now, and hence, this is what the patent cliff is. So this once I remember it happened in 2008 when Lipitor went off. So what happens is that every drug, on the first day itself, what day it will go off patent. And it is fully allowed that you pick up that drug and you reverse engineer to figure out how it has been made.
Okay.
They won't share the formula with you because it's protected by patent. But an Indian drug company can take that drug off the market and actually build it back. And you can get an approval for that.
Can I sell it here?
Not during the patent.
Not during the patent period.
Even in India, I can't sell.
No, nowhere.
Nowhere in the world.
They can come chasing you. Technically, you could sell it in a third
But it doesn't
market,
happen in practice.
It will not happen in practice because what happens is that the biggest value is to sell it back in the US itself once it goes off patent.
Okay.
So what happens is that usually there will be a huge price erosion of between 70 and 90% the day it goes off patent. At that point in time, I realized that because I'm a biomedical engineer, that actually you don't need to know the molecule, you need to know the law. So pharma is half law, half chemistry.
Okay.
So at that point in time, what happens on the day it goes off patent, you go and put your hand up and say, I have a generic, I'm willing to get tested and I want to sell it in the market. You get an approval, they'll test and it's a product patent, which means they don't check your process. You have a plant which is certified by FDA and the drug is exactly the same, chemically the same, they will allow you to sell it in the market. And obviously, because now competition has come in, the price goes down. That's a generic. Now, what happens with complex generics is that you could add some value to it. So there was a drug by Ranbaxy, I remember, where it was taken off someone, but and it had something to do with acne. But what happens is that teenagers who are normally suffering from acne would also not want to gain weight. So what happened was that drug used to work only if you were having fatty food with it. Now everyone knows that teenagers don't want to have acne and go fat. So what will happen is that they built a drug which basically allowed you to take it just with water and not have any fatty food. Stuff like that. So I'm giving an example of basically how you could add value to the drug. That is where your pricing goes above. So now it is not a pure generic. It's actually a value-added product. So what happens is that, and in fact, interestingly, the point he was talking about in 2016 till and later, is that actually the FDA came after the Indian drug companies.
Yeah.
in India for their plants. And, I remember reading a lot of their, what
This happened a
observations they
lot,
were
right? I
making.
think Divis also was affected at
lot-
that.
lot of-
No,
lot
and
of
they were
very-
doing it in the middle of the night. There was one story, I can't
Yeah,
tell you.
I would
There was
love
a
to
company
hear
where
a-
there was this FDI investor came in an auto rickshaw and turned up and said, I've come here for an investigation. And they were like, who are you? And because it was night duty, the manager was not there and they allowed them in because they showed the FDA badge, and obviously Americans being a bit more aggressive, they just rammed through and then they made observations and gave them a letter in the morning. So all of this was happening. But what happened was that actually the reason they were taking so much care of that is because they thought of India as entrenched into their system. They wanted the quality to go up. Now, what happened is that the Indians took advantage of that, in fact, I would say. Of course, they suffered a lot for those 5-6 years when this was happening. One was that they got more entrenched. The other was that they realized, the Indian plants, that one is that you don't depend on one plant, because if that gets blocked for whatever reason by FDA, you build other plants where you can supply the same drug. So it does not take away your supply. So that's one big change which happened during that period. Where every Indian company today, important drugs, there is another plant manufacturing by them.
Oh, wow.
So that if one goes, the other is working. The second that happened as a result of this was that they all realized that if we continue to stay in a commoditized generics business, there is no way that we'll move up the value chain. So very similar to what happened in the IT sector in India or auto ancillary, and now pharma, I would say. There is a French fund where the global asset allocation guy was telling me that the way he looks at Indian engineers is that there are 3 sectors where they have an edge, which is auto ancillary, IT, and pharma. And on all 3 of them, you would see that Indians have actually moved up the value chain. No matter what disruption happens, EVs came, Indian ancillary companies are growing. So people have generally adjusted to this reality, which is what he was talking about. So what has happened is that Indians are moving up the value chain, getting closer to that. Now, one thing people talk about is, oh my God, we are losing market share in API to the Chinese. But that market share is not something to be gained, because that's the lowest end of that chain. You are far away from the innovator.
APIs, generic APIs are like old school news. I mean, people have gone away from it because it's
so
highly
even Indian companies like Aurobindo, Laurus and all, they started off with API, but now a lot of their business is into generics. So they are also moving up the value chain.
Okay.
Most of the Indian companies don't just want to be a generic or only a API companies. If you are an API, you started off with API, you will try to move to generics, you will try to get into complex
generics and then specialty
some branded business in India.
And how do you know how many? You said patent cycle. Now we're going off where there are a lot of patents. How do you know this?
So see, it's like what is the size of every drug which is selling in US, right? And as he said, precisely the timeline when they would be going off patent.
Is there like
you get monthly data on US drug
all
sales.
the data. The best thing about US is you have got every kind of data.
Every data for everything.
So you have to go online and search for this. You will get the things where the patents are falling off and the size of the market share of the drug.
Yes. So that's the main role of the pharma analyst. He doesn't read what's happening in India. He reads what's happening in US, which products are going off patent.
Oh,
what
wow.
is
This I didn't know. Yeah.
And companies have to take a bet, and sometimes those bets go wrong, sometimes they go right. In case of Sun Pharma, why last 3-4 years has been so good has been because they got their call right on one of the key products, Illumi, right? But sometimes, some of those bets may not go as right, because you can't be operating on every product which is going off patent.
Because you're competing with everybody.
100 are going off patent. You decided, okay, these 10 I'm going to focus on. Right? Now, in those 10, if there are too many people who get in and the price erosion is much higher, then your bet has gone wrong. But sometimes, the price erosion is less, you get more runway of growth with the product going off patent, and competition was somehow less. Or if you could kind of make a slightly specialty product or complex generic in the same space, then suddenly the profitability of the company.
This is like a hack, because see, for a retail guy, what we look at is in pharma companies, what is the capex they're doing, which is the new manufacturing plant, how much revenue they'll get, and are they in API, who are the customers, who are their clients, and we see big names and we're like, what a great company. But I never thought about this hack of looking at patent cycle.
Actually, capex is the least relevant, I would say, for a pharma company. Except for maybe a API player, it would still be relevant because it is. But the number to track is that the products going off patent and your R&D spends, like, the R&D spend of a company, like, of a player, and where is he spending that R&D.
Do you track payback period of this R&D?
So we don't get that granular, I think, that because you don't get R&D by product.
Okay, you get general R&D of the company.
But absolute R&D spend, so you track it as a R&D as a percentage of sales.
How does that work? Like, let's say there's a company that's done $10 million worth of R&D. So what can you extrapolate from this with respect to sales? Ki sales itna badega?
So we tend to look at R&D as a percentage of their existing sales, that how much are they spending, and obviously we try to gauge that where are they spending.
So reverse engineer up.
Yeah, so this R&D, if they will tell you that, okay, we are focusing on these areas, and then you look at what is the potential of those areas. So once those products go off patent, so suppose they are spending 10 million in R&D in a particular area of, say, diabetic. You know that, okay, in case of diabetic, these are the products going off patent. So today that market is, say, $50 million. After price erosion, it would still be maybe, say, $10 or $15 million. This company might get 40% market share in the generics market in that product. So they could have a sale of $2 million. So against $10 million which they invested, they can get a sale of, say, these are like just hypothetical
You're connecting
numbers.
The dots. Yeah.
So that's how you tend to analyze that, okay, what can a particular product add to my sort of top line and bottom line.
No, and in the quarterly results calls as well as whatever analyst meets, etc., the company, at least for the next 12 to 18 months, do tend to have some clarity as to what they are trying to do.
Which segment they're targeting, and
they give you a sense of this drug
they tell you
targeting.
Which drug also?
This is the current potential. Yeah. They tell you that.
Yeah, because capex is, what happens is that capex in a classical sense is land building, all of those things. That's actually not where the value is being added in a pharma company. The value is actually being added at the innovation level.
R&D, as you said.
And that is expensed. Yeah. That's not going into the balance sheet.
So who are the top innovators in India that you have seen in the Indian market, let's say from a pharmaceutical standpoint? Because as I said, there are so many segments in pharmaceuticals, right? One who just makes the API and gives it. So where are you seeing the next growth driving? In which segment do you see the next growth driving now in India's current situation?
In terms of the big players, I'll tell. So, if you look at the two large, Sun Pharma and Dr. Reddy's, they have R&D to sales ranging between 6 to 8%, among the highest. A lot of the
on a very large sales base.
On a large sales base. So again, this is a
much
sector.
Larger.
This is a sector where the big will keep getting bigger.
Okay, that's
because your ability to spend absolute dollars in R&D will be a function of your existing sales.
And is that very important? The ability to spend a lot in pharma upfront is actually a moat that you have?
That's a game.
That's the
name of the game in pharma is, as he was saying, like, when you're developing a product or, be it generic, be it complex, how much can you spend upfront? Because you have to spend upfront and the returns will come with a lag, and there is a risk element, right? So if you are in complete innovation, the hit rate is very low. In case of generics and this thing, the hit rate is better, but the extent of price erosion is still high. So you're not sure. A lot of the bets go wrong as well. So your ability to take hits. So it's a basket approach. It's a bit like portfolio investing.
Okay, you
bet
do 100 bets and 1 or 2 will do really well.
Few will do well, but those few will make up for the rest. So your ability to allocate enough sizable sum of money for you to develop a product, it will be a function of scale and size. So the larger companies, if they are able to still spend 8% of R&D on their sales versus a small company spending 8%, the bigger company will have an advantage. Naturally, assuming they are equally good at spotting opportunities.
Understood.
See, ultimately there is an art also that which drug you bet on, whether that drug actually did well or not. Sometimes it's like a fund manager, right? So you picked up 10 stocks and all 10 could be duds. Sometimes 5 could be good. So if 5 are good, your returns will be very different. So
I have a question on this front. As you say,
the only thing is, though, it's at the same point in time, it's not that tough. The reason is because what happens is that India is not at the cutting edge of innovation.
Yeah, as you said, US is right now.
So you already have a sense as to where it is going. And while you may not know what is inside the patent details are available. So you know which are the drugs, you know what the sales are, you know what the launch pipelines are. Also, what happens is that the companies who are doing innovation are also explaining to their investors why they are doing something. So you know well in advance as to what is the thought process of, let's say, Pfizer. To give you an example, at this point in time, So every 5 or 7 years, there'll be a big cycle which happens. So as I was talking about the fact that there was this anti-cholesterol thing which was going on, then, so on and so forth. So what happens, it will move. Right now, the thing which everyone is looking at is anti-obesity.
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 Okay, that's like the big
if you
market.
read global news or generally also look at the press and, whatever, even Instagram, I think you will find that anti-obesity is the thing.
And is this what our innovators in India are also focusing on?
No. So India is not at the cutting edge of innovation there either, because anti-obesity is also has been created into some kind of frenzy socially and otherwise, mostly in the US. So, and they do definitely, at least the data seems to suggest that there is a genuine epidemic.
Yeah.
Now, what is happening is that all innovators are putting all their energies into getting into that space. So there are already drugs in the market and plus new ones being developed. Now, when you spend at Pfizer's level 6 to 8%, 12% of sales, the investors ask you what you are doing. Now, this is public information. So they explain that this is how we are going about the chemistry. They may not tell you the patent details or what they are doing and at what stage those drugs are. So if you are smart enough, you will know where they are and then you are 10 years behind. So you have enough time to adjust your model to that.
And what is the lag time between a US innovator launching something and an Indian innovator coming up with something? Is it only the patent is the lag time?
Yeah, just patent and the exclusivity period.
Okay, patent and exclusivity period. That's usually how long? Is
Because
that
they start working on that product much before it goes
even
off
5 years
patent.
before that.
Because
them-
they have to actually go and hit the market the day it goes off
Day it
patent
goes off
to
patent.
get the maximum. Because in few years, more and more players will keep entering.
So it's
and
like a
eroding
constant,
them.
ongoing effort is what you're saying.
Yeah.
Now, on the similar lines, as you said, Pfizer and, there are international companies that are listed in India as well. Do they have any advantage, is it like fair play here or is it like an advantage that is there? Like, for example, why would I invest in an Indian company if I can be closer to the innovator, as you said, and invest in something which is a foreign company based out of, MNC, which is listed here? Is there any advantage or not?
The MNC which is listed in India is the Indian operations of that subsidiary.
So they are only.
But there's no knowledge transfer that
They are
comes in?
just selling the branded formulations in India.
The one that they make there, they're selling it here.
So
But there's
that's
no
like-
More like
exclusivity.
sales agents for that. It's like FMCG.
But they don't get the benefit of exclusivity. The patent, like let's say you.
Yeah,
got
they
a-
are selling the branded product. So they are
Okay.
not competing in the generics market out here. They are selling a branded formulation out here, which is like an FMCG business.
But
that you
anyone
have
can
a
sell that.
distribution.
Even a Sun Pharma can sell.
Yeah, Sun Pharma may or may not have a competing product.
Okay. But it's open to all kind of a thing.
Yeah.
So if I had to ask you guys one hack for a retail investor to look at the pharma sector, like how would you want me to change my approach on how I look? As I said, we look at CAPEX, simple stuff. This though definitely I didn't know about the patent cycle and I didn't know about what you said about looking at what next drug is coming and how big that drug could be. This is something that is even a new thing for me. But if you tell me one hack that you would, if you were 10 years ago, if you had to tell yourself, right? What would you tell? Ki abhi aap ye mat dekho, wo dekho. What would you?
See, generally, pharma is one of the most complex sectors.
It is.
Like,
It is.
Even
Confused
for
We
over
are
there.
only talking about US right now. This is one of 4 elements of what
Yeah.
can
like
happen.
even for us as analysts in other sectors, for an analyst to pick up pharma sector
Yeah.
requires a very different sort of a mindset.
Do you do that at HDFC?
Yeah, we cover
you
pharma
track
sector.
pharma,
Yeah, we
right?
cover-
Is there any example that you might have done recently, some play or some initiating coverage on any recent pharma company? Like you have some why on it?
No, so we track all the large listed names,
Okay.
something and some emerging like Eris Life Sciences, which is
Yeah.
a smaller company compared to say some of the other bigger ones which we cover. But we like the the way they are building their business model. So we initiated on that.
So what do you look at? That's what I'm trying to
No,
understand.
it's the same thing, right? What are they pursuing? If they are into API, we tend to look at them in a certain way. If they are into generics, if they are into branded formulation, then that
Different
means it's a more
parameters.
stable, steady business. So you give a higher multiple, higher valuation to that business.
Okay.
Then within that, who are they competing with? Are they losing market share? So we tend to analyze on
Okay.
domestic pharma. You get market share data on month basis. There's a databases IPM and all which you get, which you have to subscribe to, fairly
Oh, I didn't know this.
expensive
Wow.
databases through which you can track what is the market share of a particular drug in Indian market, drug by drug, player by
Like
player.
Crocin, Rolo, you can actually...
So you would know that, okay, Sun
This is
Pharma
crazy.
had 50% market share, which is now dropped to 45%. So you will analyze the market share trend of the key companies.
So you already know whether the next quarter's revenue is going to get slightly impacted or not.
So you know that, okay, this segment is growing at 5%. So which segment is he betting on? Is it a high growth segment? Is it a low growth segment? If they are into acute therapy or a chronic, this is again a classification, right? Chronic is by its very nature more steadier, right? Because it's not dependent on some particular disease outbreak, right? So players which are more into chronic, and if they are getting market share, gaining market share, so chronic itself is growing at 10%, and if they are gaining market share, then those companies would be growing at 15%. Some other company which is operating in a 5% segment, 5% growth segment only, and even losing market share, then their top line would be flat. So we are trying to predict what will be the growth rate of a company basis the segments they are operating in, the market share trends which are there, the bets they are taking for future growth. That, okay, today they have this portfolio, but this is how this portfolio will look 5 years down the line. Portfolio of drugs.
Got it.
And basis that you take a call on the company. So it's a very bottom-up sector, very, very specialized sector. And therefore, I would say best for retail investor is probably to invest in pharma funds. There are sector funds if you
Index
want to.
and ETF, pharma ETFs, okay.
Yeah. But otherwise, if you were to analyze the companies, you have to analyze it on this basis.
I think analyzing companies, as you said, is slightly more like little complicated, right? Because from what I used to do, it was very basic. From what you have told me now I have to rethink my entire approach of looking at a lot of things now. So I think for me, those were the biggest learnings.
If you look at the Nifty, without any doubt, pharma is the most technical. You need a specialist looking at it almost on a daily basis because things go all over. And then there are drivers like what's happening in the US. You have other countries. So there is US, there is non-US out of India, then there is the Indian opportunity. So what happens is if you put it all together, it becomes almost impossible to track. The only thing which is going in India right now is the fact that actually, as discretionary spends rise, you are getting an FMCG type, early FMCG type growth cycle which is coming over here. And one more important factor which is a little bit different is that in the US, there is a lot of trust in the FDA. So somebody switches from a brand to a generic very quickly, overnight. While in India, actually, that doesn't happen as often. Even though there is a huge market for generics, as in pure generic. You still buy Crocin, for example, even though it's actually a drug which has gone off patent like probably 156, 70 years ago. But you'll still go and pay that little premium and still buy the drug. Because the trust in the brand is a little bit more than actually the process of which having reached your hand.
If I fall down, I say I want Dettol and not antiseptic or whatever.
Because Dettol, I'm sure you can manufacture in your backyard. Yeah. I'm sure you can. But that's what happens. So there is a value to the brand. And then in India, there is also one more thing. There are a lot of strong brand associations. For example, Cipla is known to have things which, you can spray, for example. So there is so many different elements, so many different ways of actually thinking about it.
So if I had to ask you 4 or 5 things that you need to look at in the pharma space, how would you outline it?
So, look, the way in which you would want to track the space is to look at where things stand and where they are going, right?
Okay.
So, if you break down the sales, which is, we start from the top on the P&L statement. I think the primary is what are the geographies that they are in. And then you take it to the next step. So in most important geographies, you have market share trends as to how their sales are trending relative to the market in that category. In India as well as in the US, usually you get very good quality data on that. Post that, what you would want to see is whether there is any exposure to any risky country.
Okay.
Which is, in the recent past, we've had a couple of cases where that's shown up. The quality of the sales is also as important as the sales itself, because for example, if you're down on the value chain, for example, in APIs, then the way in which multiples would operate would be very different from the way whether you are in the generic or in the specialized generic space. So that would be the third thing. If you want to look at the future, what you need to know is basically where the money is going in, and unlike other sectors where you look at capex, in this case, the best top level indicator of what the company is doing is actually, if you look at R&D as a percentage of sales, you have to drill down to try and understand what the R&D is going into. You want the company to be moving up the value chain, but to a large extent, R&D as a percentage of sales generally gives you a very good indication as to where that is going. I think the one most, probably two most overrated things in this, one is the capex as a number. Because, as I was saying before, the IP is what you have to build. The company's knowledge base is actually the driver of future performance. And R&D is real capex, not the plant and machinery, which is actually not where the differentiation lies.
Okay.
And the other important aspect that you really need to be looking at, which you should probably avoid looking at, is, I think at the multiple level is, for companies which have long cycle drugs, the PE may not necessarily reflect exactly where the company stands. Because what you would find is that the PE may look overstated because of a big opportunity. So for companies where single drugs are making a big difference, you have to look at the NPV of the drug, because maybe the pickup is going to happen 2 years from now, and which could be hugely profitable. So sometimes in the near term, your price earnings multiple may look very, very inflated, but actually these companies you may not want to avoid that.
Okay.
And even on the contrary, because a lot of times you might have a short period opportunity which is leading to very high earnings right now, but that will not sustain in the future. But a common mistake people tend to make is they tend to believe that these earnings, and they give a multiple on the total earnings. Whereas you have to look at what is the core earnings which is going to stay forever, and what is the exclusivity sort of a period NPV of that particular drug. So instead of giving that a multiple, because when you are giving a same multiple, it means that opportunity is going to last forever. Whereas they may be a 5-year, 7-year opportunity. So therefore earnings, a lot of times in pharma companies don't capture both. It might overstate the P in case the earnings have not come through, but the investments have gone. Or it might understate the earnings, or it might overstate the earnings depending on which part of the cycle the company is in.
Okay. And what are the two things that a retail investor should change when he's looking at the pharmaceutical space as of what he's doing today?
So I think one is we have to look at, you need to get some sense, unless it's a domestic only player, of the US market in terms of the patent cliffs which are going away, the number of ANDA filings that company is making. All this data is available, but you'll have to kind of go and look out there.
So don't just look at top line, look at this.
Because that will determine the future top line.
Okay.
So that's why it's a slightly more complex sector that you have to actually go and find data out there, but it's readily available.
And what about P's?
The price to earnings?
Yeah, because retail guys look at PE a lot.
Yeah, so I think as a metric, even we tend to use PE for these companies, but as I said, sometimes we tend to look at the core earnings and we exclude some part of earnings which might be only there in the short run. So you tend to do a NPV of a drug. As I said, if you had only a 5-year window on a particular drug, then the earnings would be say $100 million, but it would only last for 5 years, right? So you can't give that $100 million a 20 P.
Understood.
Right, because so there has to be an NPV done which will lower the value of the company significantly compared to if you were to give a multiple. So look at PE, but look at what is the core earnings and what is the short-term sort of things which are driving the earnings, and you exclude those short-term phenomena.
Yeah, but I think this is great. I think what we covered today is a lot of information on the pharma space, and I know it's very technical. I wanted to break it down as much as possible for the audience to have a look at it. I think my two key takeaways was, yes, I'm going to start looking at patents now, the ending of patent life cycle. And second, as you mentioned, the R&D spend of the company as a percentage to sales. This is something that is brand new for me. So I'm going to start looking at that. Again, Varun, Unmesh, thank you for your time today. This is one of the most insightful podcasts that I've seen with the most technical topics that we have seen. Again, yeah, thanks a lot for that. And guys, I hope you guys enjoyed this episode as well. So stay tuned for more information. Now, for all the people who love this podcast, I have something very interesting for you. If you are looking for a career in finance, then HDFC SKY is actually offering an internship program mainly for the people who are watching this video. Now, how do you apply? Very simple. fill out the form that is in the description, and also comment today about your take on this entire video. Now, I want you to put all your thought into this and do your research and fill out the form, because I don't want you to miss out on such a beautiful opportunity of doing an internship in one of the biggest security companies in India. And also, what you get is crazy amount of knowledge. So don't miss out on this opportunity. We're giving it to you. So it's up to you now to take it.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.